All right, so we've all been watching the market going a little crazy these days, and you sent in this Wall Street Journal article from Tuesday, April 1st,
Tuesday, yeah.
2025,
Hmm.
and it's all about these. The headline is literally "Wild Swings
Yeah.
Hit the U.S. Stock Market."
Mm-hmm.
So that's what we're diving into today. What caused this? What does it mean? What's the story?
Right.
And we'll be focusing mainly on the Dow, the S&P 500, and the Nasdaq.
Mm-hmm.
And the article really, points out this kind of interesting thing where the day started with this, pretty strong upward trend. And then it didn't quite hold, which I think, a lot of people are kind of scratching their heads about.
Yeah.
But even with all of that, the Dow managed to close slightly higher. What's going on here?
Well, I think one of the most interesting things about this whole situation is that initial, burst of optimism.
Yeah.
And that really seemed to revolve around Trump's trade policy.
Like the America First thing.
Exactly, yeah. The America First approach, and, specifically these reciprocal tariffs.
Oh, right.
The idea that we're going to impose similar tariffs on goods coming from countries that, are taxing our goods coming in.
So, like, if they put a tariff on our stuff, we put a tariff on their stuff.
Yeah, essentially, yeah, an eye for an eye.
Okay, got it.
And, initially the market seemed to be pretty receptive to that.
Yeah, because I saw the numbers.
Yeah.
The Dow is up, 30 points?
Yeah, around 30 points.
S&P 500 around 5.
Yeah.
Nasdaq even had this tiny little,
Yeah.
not even a point really, but it was up.
Yeah, a little tick up.
So, yeah, everybody's feeling good.
Yeah, things are looking good.
But then, like we were saying, that didn't last. I mean, the Dow did end up closing higher, but by a much smaller amount.
Right.
And both the S&P 500 and the Nasdaq, they ended up closing down for the day.
Yeah, in the negative.
So what happened? I mean, how do we go from so optimistic to kind of, I don't want to say pessimistic, but at least more cautious within the same day?
Well, I think there are a few things that were probably at play here.
Okay.
While that initial idea, this tariff thing did spark some buying, and maybe some people thought, oh, this is going to be good for, steel or, whatever industry.
Right.
But then they started thinking, well, hold on, we don't actually know which countries or which goods are going to be targeted, you know? So it's like, okay, yeah, tariffs maybe, but on what?
Right.
And that uncertainty, that lack of specifics, leads to concern about the broader economic impact.
Right, because businesses can't really plan if they don't know what's coming.
Right, exactly.
Right.
And then you start thinking about, okay, what if other countries retaliate?
Oh, right, yeah.
They're not just going to sit back and say, oh, okay, you put tariffs on us, we're not going to do anything.
Right, it could be like a whole, trade war.
Yeah, exactly. Yeah. So I think that ambiguity, that lack of clarity, really started to weigh on investors.
Yeah. That makes sense. And the article also talks about this thing called, rising treasury bond yields.
Mm-hmm.
So for the average person out there, what does that even mean? And why should they care?
Okay, so think of bond yields, kind of like the return you get on a government bond.
Okay.
So when those yields go up, bonds start to look more attractive to investors. They're seen as like a lower risk alternative.
Oh, so they might sell their stocks and buy bonds instead.
Potentially,
Oh.
yeah.
Okay.
And higher yields also mean it's going to cost companies more to borrow money,
Yeah.
which then, eats into their profits, and that can hurt their stock prices.
Right. Yeah, it's all connected.
And we saw a pretty significant jump in both the 10-year and the 2-year yields that day, which is a pretty big signal.
Okay. So we've got trade war worries, so we've got these bond yields going up, and then on top of all of that, there's this whole inflation thing. The article kind of touches on how these trade policies, while they might be intended to help American industries, could also end up, pushing prices higher for consumers.
Exactly. And the market is always trying to predict where inflation is headed.
Of course, yeah.
And while some sectors, might benefit in the short term from these tariffs, the concern is that those increased costs for consumers could end up hurting the overall economy.
Right. It's like a balancing act, I guess.
Yeah. And investors, they tend to react pretty negatively to any signs of, rising inflation.
Yeah, because inflation is bad for everybody, basically.
Right.
Okay. And then the article also mentions the upcoming earnings season as another source of, anxiety.
Mm-hmm.
So how does that factor into all of this market volatility?
Well, it just adds to the uncertainty,
No.
We've got we've got interest rates, we've got inflation.
Right.
It's like a triple whammy.
Yeah.
And investors are basically holding their breath, waiting to hear directly from companies about how they've been doing and what their outlook is. If we see some really strong earnings reports, that might calm some nerves.
Yeah.
But if companies start issuing weak guidance, then it's likely to just amplify this volatility even more.
Okay, so basically everything's kind of up in the air right now.
Yeah, it's a wait-and-see game.
And then we also saw some pretty interesting things happening with specific sectors. Energy stocks, they seem to be doing pretty well thanks to rising oil prices.
Right.
But then you've got these major tech companies kind of faltering, and that's dragging down the NASDAQ.
Yeah.
And then real estate.
Oh, yeah.
Real estate took a huge hit.
Yeah.
Why was that?
Well, that's really a direct result of those rising interest rates we were talking about.
Oh, okay.
Higher rates make mortgages more expensive, which can cool down the housing market.
Right. Fewer people buying houses.
Exactly.
Right.
And it also increases borrowing costs for developers and companies like rocket companies and Rheology.
Ah, okay. Yeah.
So that hits their bottom line.
Yeah. And their stocks go down.
Yeah.
Okay. And then there's also this little interesting tidbit in here about Berkshire Hathaway. It seems like they're actually slightly outperforming the S&P 500 this year.
Yeah.
But then smaller companies, like the ones in the Russell 2000, they're kind of lagging behind. What do you make of that?
Well, it could suggest that in times of, economic uncertainty, investors tend to gravitate toward what they perceive as, safer bets.
Okay.
So larger, more established companies like Berkshire Hathaway might be seen as less risky compared to smaller companies that are often more sensitive to these kinds of, economic shifts.
Yeah, that makes sense. So, looking at this whole picture, it seems like Tuesday was really just a snapshot of all these anxieties that are kind of, bubbling under the surface of the economy.
Yeah, I think that's a good way to put it.
You have that initial glimmer of hope with the trade policy, but then all these other concerns about, the bigger picture, the interest rates, the inflation, the earnings reports, all of that just kind of took over.
Exactly. It shows just how interconnected all of these factors really are and how quickly sentiment can change.
Yeah.
As new information comes out, as investors try to make sense of it all.
So it's not like just one thing is moving the market.
No, it's a whole web of interconnected things.
It's like a whole bunch of things all at once.
Exactly.
So for everybody listening out there, think about, these forces, these trade winds, these interest rate tides, these inflation pressures.
Yeah.
They're all interacting, and they're constantly shaping the economic landscape. And how might understanding these connections help you make sense of the news you're seeing?
Right.
And maybe even inform your own financial decisions as we move forward.
Yeah, absolutely.
So stay informed, stay curious, and as always, thanks for joining us for the deep dive.
Thanks for having me.
We'll see you next time.